Hey guys, it's Jeff Trapp here with the Tax Planning Pros, and I'm so glad you decided to join me today. We've got a really fun episode for you that I am super excited about. But first, I want to jump in and talk about a prior episode that we recorded a few weeks ago regarding some tax legislation changes that were going to help out small business owners beginning January 1st, 2023, some retroactive tax law changes. Well, that bill has stalled in the Senate, and it doesn't look like that is going to pass between now and the time that you have to file your taxes. So if you do have a business, your tax returns are due uh, in about 3 weeks on March the 15th, 2024. If you have an S corporation, a partnership return, need to get those taxes filed or extended. And things don't change on the individual or C corporation level or single member LLC level. Those tax returns are due April 15th, 2024. So, what I want to talk about today is kind of the financial pitfalls that we see when working with business owners, because we predominantly see that. And one of the reasons I want to talk to you about that is because the US Bureau of Labor and Statistics had come out and said roughly 21% of businesses fail in the first year. After 5 years, roughly about 48% of businesses fail. That's almost half. That's huge, staggering number. And at the 10-year mark, 65% of businesses have failed. Now, I've heard higher numbers, but these are actual factual numbers from the United States government. But those were really, really high numbers. And a lot of that has to do with the mismanagement of finances and not really understanding how to run a business. So I want to jump in and talk about, 10 things that you might want to keep in mind if you are starting a business or you currently have a business, and, it's not too late to pivot and make some changes when it comes to that business. But a lot of times, what we see if you're starting a business is business owners will underestimate the startup costs, right? If you go into lease a property and then you have to build out those tenant improvements, construction, always costs more. Sometimes you have additional legal costs and filing fees, and, oh no, it's hard to find employees. So now we got to pay recruiters and things like that. And we haven't thought about the actual costs of running a business. And what I typically tell business owners, hey, if you're looking to start a business, whatever you think it's going to cost, you probably want to add anywhere from 25 to 50% to that to make sure that you have enough margin when things go wrong, because it's life, it's entrepreneurship. Things are going to go wrong. So you've just got to buckle up for that roller coaster ride. Some other things that we see, right? Number two is poor cash flow management. A lot of times, folks who are business owners, they're really great at selling their product, their service, what they need to bring to the marketplace, but they're very bad about managing their cash. And, what they say is true. Cash is king. It's the livelihood of your business. And having poor cash flow can lead to, not being able to pay the rent, keep the lights on, pay for employees. Oh no, you might have to let some employees go. And I talk to a lot of business owners and I say, have you ever had to let an employee go because you mismanaged your cash? And unfortunately, there's a lot of them out there. Um, you know, the third thing here is over reliance on a single revenue source. You know, many entrepreneurs just have one revenue source when it comes to their business. But what if the economy shifts or changes and, your business is relying on the economy? If you look at mortgage brokers and real estate agents the last couple of years, right? Their business was relying upon basically interest rates. If interest rates are low, they do very, very well. If they're high, they don't do so well predominantly. Now we've got some great real estate folks that are clients, and they've been able to outlast because they've kept cash reserve and things to reinvest back into their business and actually see their business grow. So you might want to look at, additional revenue sources when it comes to your business. What additional products can you offer or sell or even upsell? You know, a lot of times when you start a business, right, or you're in business, it's tough to obtain adequate financing. Is your business structured in a way where you can obtain business credit so that you can grow the business or maybe pay for capital expenditures or operating costs? So you need to make sure, can present compelling financial statements to the bank. And, you've got to be keeping track of your income statement, your balance sheet. If your business is just going down, 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 I think it's probably not going to want to lend to you. But if you can show that, hey, your business is consistently growing year after year, or at least on a consistent trajectory, then you might want to look at, what you can do for as far as obtaining credit. And, what I kind of counsel business owners, hey, business is really good right now. Start reaching out to your lending partners of, getting that line of credit or securing those things. You may not need them now, but if the economy shifts and, something happens, heaven forbid, you at least have access to that capital. Now, a big thing that we see in our business is, unfortunately, a lot of business owners neglect to plan for taxes, right? They pay everybody else first, even themselves, but they forget to set aside and pay Uncle Sam. You've got to pay your payroll taxes first and foremost. You might have business property taxes. A lot of people don't think about that. And then you've got your income taxes. You need to set aside your money for that. Typically, we advise at least 15% of your gross income should be set aside for your income tax bill. And, we see a lot of business owners, and they can't progress their business forward because, you know, they are behind on their paying their taxes. They are behind on their business tax returns, and it really, really can set them back for many, many years. Um, Another thing that we see in our business is over expansion, opening other locations before maybe other locations haven't become profitable yet. This is very, very common that businesses have overexpanded. And, we had a client, she actually went out and bought a business, right? But she bought a business that had multiple locations. Well, one location did fantastic. The other two were kind of stinkers, but she was stuck with them. Eventually, she couldn't figure out how to manage it, and she ended up selling the business for pennies on the dollar. So those are things you need to think about. You know, you might have inadequate financial planning and analysis. You need to regularly review with your accountant or CFO the financial health of the business, looking at the balance sheet, the profit and loss statement, and make decisions based upon the metrics and the key performance indicators from your business instead of making emotionally based decisions. As human beings, we're emotional creatures. It's easy to say, making a decision based upon your emotion. And I would just say, take a step back and let's look at the financial data. And then a lot of times what we see is people ignore personal financial security. A lot of people will invest a lot of their own money into a business to get it going, to get it started, or to get them through a tough time. But then, they can't make their mortgage payments, and, they can't pay for all the lifestyle and living expenses that they have. And then, a lot of times what we see is people will underprice or overprice products and services. Setting the wrong price for your products or services can, leave money on the table or drive away potential customers. So you have to go through that delicate balance and find, what the right price is for your product or service. And then, maybe every year you adjust that for inflation to keep up with what's going on in the economy. And then the last thing I want to talk to you about is a lot of business owners do not have an emergency fund. And so there'll be times and seasons when you're in business where unexpected costs will arise. There'll be times and seasons in your personal life where unexpected costs will arise. And if you don't have liquid cash on hand, you might have to go after expensive debt. You may not be able to pay those bills. Heck, you could even go out of business. And so what I advise my clients to do is keep a 6-month reserve of liquid cash in the business, but also a 6-month reserve liquid cash in your personal accounts so that you don't have to dip into the business when things go awry in your personal life and vice versa. And, that should help you weather most storms. Now, if you get to the point where you've gone through all of that cash, then you're probably in a pretty bad spot. And so you're going to have to seek out other alternatives for financing or maybe even shut the doors to your business. So, avoiding these types of financial pitfalls, requires careful planning. It requires working with industry experts like attorneys, accountants, tax strategists, financial planners to make the right decisions. So make sure you align yourselves with the right people. Um, you know, they say that your alignments will determine your assignments. And if you have great alignments in these areas, then, you have a greater chance of success. Once again, I'm Jeff Trapp with the Jeff Trapp podcast and the Tax Planning Pros. I'm going to go ahead and leave a link down below for a free tax playbook so you can learn how to save money on taxes, give less to Uncle Sam, put a little bit more back in your pocket. And if you enjoyed this episode, please share it with a business owner because these are some things that they need to know. Once again, I'm Jeff Trapp, and I'll see you next week.